Welcome back, everyone. Gold moved higher in the past 4 consecutive daily sessions, making the first week of July a rather interesting run for the bulls. This movement seems to suggest that some sort of change in fundamentals of the gold market has prevailed. During this week's report, we will identify previous events that have moved gold's price and also upcoming economic events that could act as motivation for traders seeking information to base their trades or strategy. After our fundamental update, as always, our technical analysis will follow and levels, trend lines, and indicators will be considered as we aim to provide accurate and precise information. Even though the US employment report released on the 2nd of July was far from analyst expectations, gold's reaction was mild in our view, as the data provided mixed signals for the US economy. Non-farm payrolls jumped to 850,000, while the unemployment rate rose to 5.9%, indicating more jobs were cut than produced in June. ISM manufacturing for June, released on the 1st of July, a rather solid indicator for the industry, was also down for June. So overall, we could say some important economic data for June may have been disappointing for traders. Even though the data was not drastically bad, some economic risk may have been increased as the expectations on economic recovery in the US are currently very high, with the stimulus packages already in place. This view was also shared by Robert Kaplan, the Dallas Fed president, who stated in the past days that the economy was likely to meet substantial further progress. In our view, the recent data could be providing some upward momentum for gold prices currently. In the past 2 daily sessions, Friday and Monday, the US dollar moved lower, possibly supporting gold prices by increasing demand for the metal. Even though the USD has not clearly reversed its downward trend according to the dollar index, some positive correlation with gold could also be in play, as they have both moved higher on a weekly basis. In the following days, traders will be turning their attention to some rather interesting economic releases that could provide the necessary volatility for setups to be carried out. On the 7th of July, we get the FOMC meeting minutes, which is greatly anticipated by traders. Any new information on the bond buying program or on interest rate hikes could be a source of energy for traders. This event has the potential of moving gold prices extensively, thus caution is advised. On the 8th of July, we get the Fed Consumer Credit Report for May and the weekly initial jobless claims figure. Finally, in the next week, the US inflation data for June, released on the 13th of July, could keep traders under surveillance and in position to trade. As our conclusion, a global matter that seems to be capturing noteworthy attention in the media since the start of the year is the rising house prices around the world. Important economies like the US, the UK, Germany, Australia, and Canada are seeing house prices booming at a significantly high rate. Even though the happening could be a result of central bankers lowering interest rates and buying up assets, some analysts argue that this could be a sign of a property bubble, which could be preparing a rise in gold prices in the medium to long term. Moving now to our technical analysis, please note this is gold's 4-hour chart. So far in July, gold has formed an ascending trend that is highlighted with the upward channel as indicated in our chart. At the moment, gold is trading nearby 1800, which is the highest price so far in July. If the upward momentum continues, then the R1 1819 resistance line could be the next stop for the buyers. If more buying orders come in, then the metal could be heading to the R2 1840, while a breach even higher could lead us to consider the R3 1856 level. In the scenario of a selling momentum, gold could fall to the S1 1795, which is the first support line. Lower than that, we have noticed some opening and closing of orders nearby the S2 1775 line, which can also assist traders as a make or break level. The lowest support for this analysis is the S3 1755 level, which is also approximately where gold started trading in July. As a final direction, and from our point of view, above 1800 round number level, a bullish momentum persists, while lower than that, the bears are in control. Thank you very much for your time and focus. We appreciate your participation, and if you like this video, please feel free to share and subscribe. Please note, as an effort to support traders on as many fronts as possible, we are now presenting live weekly webinars on trending subjects, and all our subscribers are welcome to participate. From everyone here at IronFX, wishes for solid trading.